All right. So as we go ahead and start this session today, what questions do you guys have about entries and exits before we move on to anything else? So any at all, any questions about any kind of entries, any kind of exits, uh, anything that's still fuzzy, not clear, or anything like that at all?
Yes, good evening. Yes, I do have one question. Mine is exactly where should I place the long and short tool? So I tend to put it just at the cross, but when I looked at the video again, it seems as though you put it a little higher than the crossover. So I need that clarified.
So where exactly do you put the entry? Is that correct?
Yeah, where do I put the long and short position tool?
Ah, gotcha. Okay. So and this is like, are you saying like retroactive, or let's say as you're going into a trade?
Well, that's a good question. I think in both circumstances.
Okay. Well, let's take a look at that. Give me 1 second. Let me pull up a chart and we'll take a look.
Thanks.
Give me a pair. Give me a pair, anybody. Pound USD, Euro
My
JPY.
pound USD is good.
All right. So can everybody see my screen?
Yes, I can.
Great. All right. So just to use this, we'll go over a couple of examples actually. So this is just one example. All right. So where would you put um, your meter here for going long on this? All right. So if you're looking at it like this, as it's already happened, and things of that nature, then you're going to be putting it like up here, right? Because that's when the crossover happens on this candle. So you'd be getting in on the very next candle. Okay, is where you would start, and then of course you can move this essentially, over. Let's see, so like this. So you can start out obviously at 15 pips, and then you can move this up to, let's say, just 30 pips. Typically, let's say in this example here, if you have anything that you can use to help you uh, take profit, right? Anything at all that you can use to help you get to a take profit point would be great. So, like, let's say yesterday's high. If you have the EMAs in your favor, last week's high or low, any of that stuff that you can use it to your advantage, and use it as somewhere where price could go to because it's already been there before. Does that make sense?
Yes, it does.
And then as far as the stop loss goes, um, if you have a situation where the candle is too big, then it doesn't mean that you can't enter the trade. It just means that you need to lower your risk. Well, how do you do that? Well, the easiest way to do it is, if you normally trade, let's say, a standard lot, a 1.0, right? And that's your normal thing. If you get a situation like this where the candle's so big, and let's say it's like a 20 pip, 25 pip candle, right? Then you could lower your risk essentially by going on a lower lot size. So do a point, 50 instead, or a point 25, you know, something like that, that actually allows you to still get into the trade, but lowers your risk.
Okay.
Does that make sense?
Yes, it does.
So very important to keep that in mind. Because remember, just keep this in the back of your mind always, that this is only one trade. There's going to be trades literally for eons to come. So it's not like this is the last trade you're ever going to take or anything like that, right? So you're going to have trades, you know, for God knows how long. So it's not the only trade. So just play it safe, right? Play the long game. Don't worry about the short gain right now. The short gain doesn't matter. It's not going to make you into this, you know, 10, 20, 30-year trader, you know, because remember, if you don't have capital, you can't trade. So why risk more than you have to when you know tomorrow's going to be another day? It's going to be more opportunities. So, you know, why take a chance? There's no reason for it at all, you know? And so this is where taking into account that you have to just concentrate on the trade setup, and the consistency of you finding those trade setups. That's what's going to give you the output that you want, which is, you know, gains, money, you know. So if you can do this consistently over and over and over again, I mean, you're good. You'll have longevity, you know. But if you can't, if you always think about just the money part, then forget it. It's going to end real quick, within 90 days probably, you know. So yeah, so just to keep it simple, go out 15 pips and see where you're at. You know, does it allow you to get below this low here? Okay. I have been testing uh, a different entry essentially that you can possibly take. So, and that's basically waiting for just a close above the 13 EMA. So, and I found that essentially I've only gone back as far as back a year, right? So it's not fully tested like I normally do with like a 3 years period. So it's only been it's only a year so far that I've gone back. But on average, if you do a 13 EMA close, so meaning that you wait until price closes above the 13 EMA on a second leg, typically you can get into the trade one candle sooner. Is what I found over the last year. Now, what I'm planning on doing is I'm planning on going back from 2015. So 2015 through 2019 and see what the average is and see how many times is it correct versus, you know, actually wrong. But so far, it's the only thing that's been close to give me close enough numbers to a 5 and 13 cross. Okay. So if you want to help in this, by all means, when you're doing back testing, right, you can start to implement this and see what results you get out of it. But for the last year of data so far, generally speaking, you've been able to get into the trade one candle sooner. You know, when I find a setup that's like a great setup, right, and I put different EMAs on there to see what kind of combination EMAs would allow you to get into the most optimal, you know, type of entry on that setup. You know, you get, you know, setups like that do like a 9 and 5 and 9 or a 5 and 10. Problem is when you go back a year, these combinations, they just don't work. You have way too many losses. Does that make sense?
Yes.
So, I mean, I've tried literally, you can think of all the combinations you can. I've tried 5-7, 5-8, 5-9, 5-10, 5-11, 5-12, 5-3, 5-4. I've tried them all, and they all just give you way too many losses to begin with. So the only other option that I've found that has been somewhat sustainable is a close above the 13 EMA. Because generally speaking, by the time that happens, the crossover typically comes in the very next candle. So, so it's a way to get in one candle, typically one candle sooner, right? Let's take a look at something like this. Let's say if you trade, a railroad track here. If you have the crossover happens here. Let me turn this thing on here. Yeah, see, so crossover happens on this candle here. And again, if you wait for just the 13 to close above, you get basically a candle sooner. You see? So
basically what you're saying, sorry, I don't mean to cut you, is with this technique, as soon as the cross happens, that's when you get in. That's what you're saying?
with the new thing? No, I'm saying with this new, so you're basically doing this. This candle, let's say this candle is let's say we're right here, right? I'll just load here real quick. So let's say we're right here. This next candle prints. Mm-hmm. It closes above the 13, right? So you're looking at this. You're looking at getting in on that candle right after that candle, right? Okay. So after, let's say one more candle after that is when you actually have the crossover.
No, oh my God.
Oh, so we're talking about when the candle closes over the 13.
When the candle closes over the 13, right?
Got it.
Right, which is this, in this case, this blue candle here.
Understand.
The next candle, if you wait another 15 minutes, that's when the crossover happens. And that's why you get the dot to print. Ah. Right? So, yeah. Interesting, yeah.
That'll be good.
Yeah. So again, it's something that I've only done for a year so far of back testing. So I normally like to do 3 years. It gives me a really good, idea as to what's going on. So like another example is this one here. So after this candle prints, right, this big one here, you would have your entry. Second leg entry here, instead of waiting for, in this case, 2 more candles to finish, like 45 more minutes to get into the trade. Let's see, I believe this was, so you have something like, let's say, a continuation trade off of New York, right? You're not at the high, you're not at the low, you're in the middle at the opening of the New York session here. See, so this candle closes above the 13. Right, so then you would put this on right after that candle. You could do 20 pips out. So it kind of basically saves you, again, it's one candle before, basically.
Yes.
Is what it takes you out to. And that's on average, that's typically what you'll get, one candle before. So just keep that in your back pocket, essentially. But again, this is all only still second leg only doesn't change the fact that you want to wait for the second leg of an M or W to happen, you know?
When I was doing the homework, I really noticed that the average stop loss is really at 15 and the take profit is really at 30. I was like, oh, you guessed
Ooh.
it well.
Oh, that's a good call.
Yeah. Yeah. So what are the questions? What are the questions? Entries or exits? Any questions that you're not clear of about the video? Anything at all?
Yeah, hi Mark. When you've got your trading zones, whether it be London or the US session, would you tend to shy away from a trade if the crossover is not going to happen until maybe the last one or two candles, because it's really starting to border on that sort of zone in between them?
That's a good question. So that really depends on what has happened the rest of the day, the previous, leading up until that time. So, and you're talking about like New York, is that correct?
Yeah, it can be either the London session or the US when you're waiting for that crossover. And if that crossover doesn't happen till maybe the last one or two candles of that trading zone,
Yeah.
does that influence one way or the other?
It can influence it because you got to take a look at this. So let's just say if you're doing the US session, right? And let's say you're talking about the box, let's say it ends at 12 p.m. That's Eastern Standard Time, right? And let's say that it's FOMC day. That news doesn't happen until 2 p.m. Eastern Standard Time, right? So typically, this is going to move the market at least 50 to 70 pips that day, right? So if I know that this is basically going to happen later on, you have to be aware of that. And so if there's no move available and basically the move happens, right at the edge of this box here, then you have to be aware of it. If there's no movement at all, so like if you have an ADR on like let's say pound USD, that ADR is about 108 or so. Let's call it 110. If it's 110 ADR and you've already moved for the day, let's say 95, 100 pips or so, you don't have very much room left. So if it's making, let's say, an M here, to come back down, what's the likelihood of this coming down and actually giving you like 20 pips or so when it's like very, at the edge, your ADR has already been filled for the day. You know what I mean? So it doesn't make a lot of sense for you to take a trade like that because you have a lot of things against you. You're at the end of the session, you're already moved, 97% of the ADR for the day. So unless you have something that's news that's coming up that it's going to move the market, it just doesn't make any sense to take that trade. For the London session, if you have if you get a trade, let me see if I can find one here so I can show you where it would make sense. So like here. So if you have something like this, so 17 pip 17 pip Asian range, 42 pip London session so far. And let's just go back a couple more here. So right here, right now, what would you be thinking, you know, if this is what you saw, what would you be thinking what you would be waiting for? Can anybody tell me what kind of setup you'd be waiting for on this?
Be waiting for the cross back down to go short.
Right, so you'd be waiting for, you know, a short to happen because we're already on top of the range, right? We're basically bouncing on top of the range. The high here essentially is holding.
Yeah.
Right, so you could call this whatever, the first leg, and then these are just, you know, the apex calling, creating the second portion of the second leg. Now, let's just say that you call this the second leg. All right, so you see an M here going down, coming up, and then coming back down, and now you're getting towards the end of the session here. What do? Right, so let's just say that you enter a trade here, just let's say based off of the fact that you think that this is the high of the day. You have pretty good evidence, right? Because it's been holding for since what, 3:30, 3:15. It's been holding straight across, right? So you don't have anything bad to think about. And let's just say that you take this trade entry because of, let's say, just a close below the 13 EMA. Right, and this is like, I believe, what is this, like 6:30? Yeah, this is 6:30. So it's literally right, you know, 2 more candles and you're outside of the box. Right, so if you take this trade and let's say you're only 10 pips out from the high of the day supposedly at this time. Right, so if you take this trade out, I mean, what's going to happen? You're just going to be taken out in 2 candles. And then you'd be like, oh, what the hell? Then now you wait for the US session. And let's say you're here now, what, 8:45, 9 o'clock, about to open. Where are you essentially at the beginning of the US session that starts, you know, 9:15, 9:30? Where are you? So do you get any kind of NEM here? You really don't. This is more like a, you know, I don't know what the hell you want to call this, a mini M or something, but it's not really something that you could, you know, say it's an M, unless you're just like really picky and you want to call that an M. But if you do call that an M, let's just say that you believe that this candle here, believe that that candle basically spiked up and created the high of the day at that point. Let's just say you're back here now. So you're back here. You're now in the box of the US session. Let's just say you keep going with this you know, entry because you see the close below the 13 EMA. So you get in here. What's your stop loss right now? If you think that's the high of the day, you're still the same thing, about 10, 12 pips or so, if they're not coming back, right? And then how many pips can you take out of this if you go short on this? Let's just say you use the middle of the range. You're at 15 pips. Is it really worth it to go 15, 16 pips for that? You're at a 1, you know, 0.42. You're not at a 2 to 1. To get a 2 to 1, you'd have to go all the way down to the bottom of the range, right? So if you go to the bottom of the range, you're looking at another 30 pips. So can you get there if you've already moved 17 and let's call it even 43 so far from the London session? That's about 60 pips. And what's the average of this? So you got about 108 or so. So you still got another 40 something pips to go, right? And I don't even know, does this make it all the way down? It doesn't, does it? Oh, it does. Look, it spikes it all the way down to the 200 EMA. You see that? Spikes it to the 200 EMA. So theoretically, if you take that trade here, you can get your 24, 20 pips out of it, right? As long as you have your take profits set. If you guys don't do take profits, if you guys don't set that stuff, then guess what? You're going to be taken right back out. So question to you guys is, how many of you guys, when you take trades, actually put a take profit like on the actual trade, so it takes you out of the trade?
Yeah, I usually have a take profit set.
Anybody else?
I only do demos for now, but yes, I do take profits.
Okay. Well, good. I mean, the whole point is that you definitely want to just have a take profit in place, because if you don't, guess what? You literally miss the opportunity to get your pips for the day, and it takes you out as a loser. You turn a winning trade into a losing trade. So what are some reasons you think that you wouldn't put, why would you not put basically a take profit in place?
I guess the only one is if you've got a trailing stop or something and just letting it run until it comes back to hit your trailing stop.
Well, that means that you still have a trailing stop on it. I'm saying, like, so if you have a trailing stop, at least it moves. A trailing stop will move along with price, depending on how far back you have it, you know? So that's fine. But what happens when you take a trade and let's say you put in, you know, your stop loss, you got your entry, but you don't put any take profit? Like, what's going to happen? It's going to come down and then it's going to take you out. And then now essentially you just had a winning trade. And now that trade turned into a loser. Why? It makes no sense. You know, it really doesn't make any sense for you to even take a trade and just not put a take profit in place, because this will happen to you repeatedly over and over and over again. It wouldn't be the first, and it's not going to be the last, you know? So hugely important that for every trade that you put in, whether it's demo, live, whatever, make sure that you have the trade, you know, planned out. Make sure that you know what it looks like, and make sure that you have a take profit in place. Because if not, literally this will happen. And another thing is make sure that your take profits is somewhere that's easy to hit. You know, don't put them hard. Don't put them somewhere where it's hard to reach. Put it somewhere where it's easy to hit.
Hey, Mark, I've got a question about that. Can you hear me?
Yeah.
If you're in New York session and the EMAs are in your favor, and you're heading towards the 200 EMA, which is 40 pips away, would you still take only 20 pips, or you'll go with the 40 pips towards the EMA if the ADR is still good for the day.
Well, if the ADR is still good for the day and you have room in that, and another question is, where's the 50 at? Have you passed the 50 yet?
I don't know. That's not in my scenario.
You know? Well, think about where the 50 is, right? So if it's something like this, right, where you're entering the trade and you have good separation, I mean, the 50 here is only 7 pips away, right? So you gotta think about the separation that you got. If you can get to the 200, I would aim for the 200 always. You know, as long as you have the ADR, as long as the ADR matches to where you have plenty of room still left. So in this one, I had only used about 60 pips so far ADR. So I still had another 40 or so, 40, 50 left over. And I mean, that session was 50 pips. So, I mean, there you go. You know? So use all that to your advantage, but make sure that you put it, towards a target that's easy to hit. Let's say if you don't have the 200 here, you know, can you get it to the bottom of the range here, to this bottom here, right? And it's the US session. So here, can you get just 20 pips, right? 20 pips, 22. I mean, if you make it a 2-to-1, depending on where you have your stop, I mean, I guess if you believe that this is literally the high and this spike caused the high of the day, then you'd put it literally right here. And if you're, you know, if they take you out fairly quickly. But I mean, now it gives you basically a chance to play out with the 2-to-1, with it being now you can get 20, basically 20 even, and you're at over a 2-to-1 risk to reward ratio. And as soon as that spike happens, it'll take you out of the trade. Because remember, if you put this all the way down here where the 200 is, remember that the spread, the ask and bid still have to basically go over the line on your broker. So essentially, if you have, let's say your take profit down here, remember there's two lines that basically are moving along with price, the bid and ask, right? They're like this, and they're constantly moving. This top line has to break past this line here, your take profit, for it to actually close out your trade. So if only this line here crosses your take profit, that doesn't take you out of the trade. So remember that. So very important, just keep it simple to where it's somewhere easy to hit and it's not difficult for price to get to. Does that make sense?
Yeah, thank you very much.
So, may I ask, when with the 30 pip that you typically want us to take, would we cross that line with the ask price? Would it be included, if you know what I mean? So that we will get the 30 pips and not be a few pips shy of closing that trade.
Well, let's look at a scenario where, I mean, you're typically talking about, 30 pips in the London session.
Right.
Is really where you're talking about, So you got to think, what's a trade setup essentially during London? What was the trade setup recently? Anybody had a trade setup during London recently? That gave you anything? Here, this one. Which is this happened Wednesday. Was anybody paying attention to this on Wednesday when it happened?
Yeah, I believe we were on that day, right? Wednesday morning. What time was it?
This was Wednesday, so that would have been we would have been during the U.S. session.
Yeah, we were on.
Because Wednesday we did the U.S. So this is what happened like before. But so you're asking about when you put in, let's say the trade, when you put the 30 pips out, let's just say, you definitely want to count the spread and stuff into it. Yes. So if you trade, let's say I don't know, let's say pound CAD. What's the pip range on pound CAD right now, or the spread actually? Let's see, pound CAD has what, a 3 pip spread right now? Am I correct? Does everybody see the same thing, or if you look at your MT4 or something like that? Yeah, 2.53. Yeah. So take that into consideration. Yep. Whenever you're putting out your stop loss and stuff, depending on what pair you trade, you're going to be having to pay for that spread anyways, regardless. So make that into consideration. So let's say if you aim for, like, let's say 30 exactly, you're going to get like what, 27
Right.
of actual, actual payment. So if 33 is somewhere, listen, I'd rather take 27 than miss 30 any day of the week. Okay.
Right.
I mean, we're literally talking about small numbers that really, are irrelevant. You know what I mean? So anything that whether it's 3 pips or, I mean, that's just ridiculous for you to miss a trade over 3 pips. You know?
Right. So it basically would include the broker's fee, the 30 pips.
I would, yes. If you trade AUD pairs, I mean, you're going to have to pay a lot higher cost. So like, the pound NZD, for example, is at 5 pips right now. Sometimes it's higher, but
Is that
typically the NZD are always the highest ones.
That includes the Euro NZD too?
Euro NZD right now is at a 3.2. But if you look, typically the pound NZD is always the highest one, followed by Euro NZD, and then followed by pound AUD, and then Euro AUD.
Okay.
So NZD, I almost see it like this. If you're talking about just spread in general, the NZD pair you're going to pay more for, followed by the AUD pair. Once you get rid of those two, then you're talking about basically the CAD, and then followed from, where's the other one? CAD, then JPY. Swiss is about the same as JPY. And then USD is always the lowest. For some reason, though, when you have a currency ahead of NZD, so like pound, NZD, more expensive, Euro NZD, more expensive. When NZD is in front, like NZD USD right now, it's got a 1 pip spread. AUD USD is only a point less than a pip spread basically. So let me see if we have NZD. Here, that one. Where's that one? Yeah, so NZD JPY is like 1.7. So very small spreads when NZD is the first currency. If NZD is the second currency, spread's much higher.
Interesting.
Interesting it is, yes. All right, what other questions with entries and exits that you're unsure of, don't know? Does everybody understand the entry triggers? Everybody
Yeah,
understand the exits? Yes.
I have a quick question about, generally we might chase 30 pips in London or 20 pips in the US session. At a 2-to-1 risk to reward, I mean, it's 15 pips or 10 pips. Do you change your, I guess, risk on that? I mean, if maybe a 1% at 15 pips, do you take the same approach in the US session? So keep the same trade at 1% for the 10 pip stop loss? Does that make sense?
You're saying how much of your account should you risk?
Yeah, I mean, if obviously 10 pips is less than 15 pips, there's not as much room. Do you change the equity that you risk in that trade?
That depends on your account size.
Yeah.
So give me an account size.
Just say 10,000.
So 10,000, whether I'm going, so on a $10,000 account, whether I'm going on a US session or London session, it's still the same for me. It's a standard lot. Would be the whatchamacallit, the lot size, right?
Yeah.
And so this is only one trade though. Keep
Yeah.
that in mind. So this is one trade only. So the only way that this would change for me on a 10K account is if, let's say, I want to get in, but the candle is a big candle.
Yeah.
Over 15 pips, and I'm dropping that to 0.50 or 0.25.
Yeah.
Because you have to think about the fact that especially if you're doing that in the US session, when this candle is about, more than 15 pips, you have to really think about it. Okay, is the ADR in my favor, right? Because if it's not, then you probably shouldn't be taking the trade on the US session.
Yeah.
Because if that candle is that big, I mean, you're probably not going to get a lot out of it. You know what I mean?
Yeah.
But yeah, so if the candle's big, I would lower it to 0.5, 0.25. Other than that, on a 10K account, I'm taking a standard lot on a trade. If I lose, that one on a standard lot, it's $150.
Yeah.
So you figure 10K minus 1% is about $100, right? So I'm at like what, 1.5%?
Yep.
Somewhere around there, for that particular loss. But that's how we do it.
Yeah.
And so we're gonna have a week where we talk about risk management, and there's a certain sequence that I think you should take your trades in as far as lot sizes and how do you go up and down with the lot size and stuff. So we'll discuss all that. So that way you get a good idea as to what you should be using for your risk management on your account. And obviously everybody's going to be different depending on, you know, the capital that you start out with. No matter what the capital that you start out with, if you're starting under, let's say, under 10, if you're starting under 10K, the first goal, your first goal is to get to 10K. Because the compound effect doesn't take place until you get to 10K. You don't really start seeing it. Once you hit 10K, then you start seeing it. Right, right, Gary. So you're taking the 3 boxes and you're just counting the 3 boxes. Is what you're doing to get the ADR. You're adding up 3 boxes. All right, any other questions on this?
Kendrick, could just elaborate a bit more on the entry triggers, please?
On the entry triggers? Okay. So, I mean, entry triggers are going to be pretty simple. You're looking for a second leg. Type 1, 2, or 3. Right? So that's the first thing. Second thing, it's got to happen inside of the box. So second leg has to be inside of the box. And that's either the London box or the US box. Okay. So as long as you got a second leg of an M or W, type 1, 2, or 3, second leg is inside of either the London box or the New York box, then the next thing is basically your confirmation, which is essentially the 5 and 13 crossover. And then if you want to start using just a 13 close, you can. Just keep in mind that this is still like, call this a beta version. Does that make sense?
Yes, it does. I just wanted to, you know, the term trigger entry is just what
that's all it is. That's literally the entry trigger is just basically what's your entry going to look like,
Gotcha.
right? What are the rules for your entry? What are you looking for to enter a trade? You're looking for a second leg M or W. That's a type 1, 2, or 3. Second leg's got to be inside of the box. And then the last thing that you're looking for is either the crossover or a close above or below the 13.
Yes, thank you.
Okay. The second leg, it could be coming into, let me close this out real quick. The second leg can be going into, let's say, the London box. So you could have a first leg in the London, second leg in the New York session. You could have both legs in the London box. You could actually have both legs in the New York session if all they did during the London session is move sideways. Right. So let's say this is your Asian session here. Let's say this is your London box. And let's say, so this is Asia here. And then they did nothing but basically just move like this sideways throughout the whole London session. Whenever you see that kind of behavior, and let's say this is like 25 pips, this is another, you know, let's say 15 pip box because of the movement sideways. like, and you're talking like pound USD, like, you know, there's got to be a move that happens during the New York session, right? This move is just setting up people. The New York session is when you're going to have your move happen. So you're still looking for a type 1, type 2, type 3 setup. So this would be like a type 2 setup, you know? I cannot stress this enough, guys. If you learn the behaviors of the market maker, that's the main goal. So think about it like this. If you start thinking essentially like a bank and stop thinking like a retail trader, right? So start thinking like a market maker. Like, if you were a market maker, how would you trap traders? How would you do it? You know, what would you do to trap people into trades? You know, if you look at like, I believe it's like IG has one. If you go to look at the sentiment of the market, right? They'll tell you the sentiment of their of what the majority of their traders are. So they'll be like, you know, pound USD. They have 70% of the traders are going long, and only 30 going short. Right? If you're a market maker, who are you going to be with? Are you going to go long or are you going to go short? How many people would go long? How many people would go short?
Your market maker, you'd be going short because you wouldn't have to pay out as much.
Right. You'd be going short. That's what I'm saying. So if most retail traders are going long, you want to go short. You want to do the opposite of what every retail trader is doing. Right. So that's why I tell you is when a trend becomes obvious to everybody and a blind person can see that the trend is going up, you should be looking to go the opposite way.
Oh,
Does that make sense? Bless you.
thank you, Mark. Hi, guys.
Hi.
Good morning, my time. It's about 2:54 a.m. All right.
So think about that. You know, whenever the sentiment is 70-30 like that, like you should automatically be thinking short. Because there's way too many long orders. That means that there's going to be some short orders that are coming into play. So keep that in mind, is the market sentiment. There's a bunch of websites out there that show their market sentiment. I believe IG does theirs. I want to say Daily FX also shows the sentiment for one of the big brokers. Has anybody seen what I'm talking about?
Oanda does as well.
Wanda does, yeah. So the daily sentiment is just a quick way to show what are traders basically thinking, you know? All right, so what are the questions with entries and exits? Yep, IG. Yeah, so Daily FX does the IG sentiment. So yeah, Euro Swiss is 80%. Yeah. Yeah. So Let me see here, daily. Sentiment. This is basically the sentiment of all the traders that trade with IG right now. Look. So you can use this to your advantage.
Sorry, guys.
ADUS.
I don't mean to take you back. How do we use the sentiment to our advantage? I just got it. Sorry. Just a short recap. Sorry.
It's just a quick way to know what the majority of traders are thinking or positions that they have open. So this just shows essentially the open positions right now of retail traders through the broker IG, right? So in this case, you have, let's say, on Euro USD, you have 66% of the traders are going long and only 34% are going short. So because you have more orders essentially going long, retail traders are going long, you basically want to do the opposite of what retail traders are doing, which is go short. You know, so like right here, you have 50-50 balance on this, right? This one's kind of, you know, same thing. 56% are going short, only 44% are going long. So the best way to use it is just to look at the really obvious crazy ones that are just off, right? Like a Euro, like a USD Swiss, 80-20, like that's way too much. That's way too much sentiment on one, you know, on one pair. Talking about silver is, you know, 90-10. So that means that they're going on a very, this is a trend, right? If you see numbers like this, there's got to be a trend that's happening. So you talk about like silver. So what's the trend right now in silver? It's what, going up, right? An uptrend. Yeah, look at the EMAs, right? It's an uptrend. So you have 90% people going long on it, only 10% going short. Well, I should tell you at some point, this is going to have some kind of retracement here. Whether it's when it gets up to here at $18 an ounce or whatever, but this is going to have a retracement soon. There's too many traders going long on it. Does that make sense?
Yeah, it does. It does.
Crude oil, you know, crude. I want to say, is it burnt? I don't know what crude oil is. This one, let's see this one here. It's definitely not that one. That one, only 14. Yeah, it's not that one. It's the other one. But essentially, yeah, you want to do the opposite of what these guys are doing. So these guys are going long on U.S. crude oil, and we're going short, bearish. And how this thing tells you here, bearish, bearish, bearish. So these are just, think about this, guy. These are just tools, you know, tools that you can use. This is daily, weekly, you can change it. But these are just tools that you can use. That's all it is. Everything that you have is tools. It doesn't replace your ability to see the pattern, the time that it happens in, Nothing is going to replace that ability to see that. You know, so that's really important for you to see that. Is you have to be able to still see the pattern, the timing. You have to know where you are in the cycle. All that stuff matters way more important than anything else, because that's what you're trading.
So that's what I was going to ask. You're just going to use this sentiment like a little forecast for us to keep in the back of our mind that, hey, this thing is way off balance. It can, tank at any minute, but we still use.
You still use a pattern. Exactly.
Yep.
The
main thing. Okay, great.
Yep. Just think of it like if it's let's say pound USD 90-10, 90 going long, 10 going short, then you're like, okay, well now I should be looking for some kind of shorting opportunity soon. So if you get think about if you get a setup that is going short, like a type 1 setup, right, going short or something like that, how much more confident are you going to be in taking that trade, knowing that the sentiment is 90-10? You know what I mean? So these are all. What's that?
This is always current. Like if we go on in the mornings, we'll see what's the forecast for the day, or. Yeah.
They change it all the time. Yeah, it's changed all the time.
Okay.
Yeah. So depending on what broker you are, obviously with so they have brokers all around the world, obviously that show their own sentiment of their own customers. So yeah, it's something that's definitely very, very common. Any questions on the test answers?
Yeah, I have a question.
Yeah.
Whenever I take a picture to one chart, when the chart is safe, I can send it like for the test or something like that.
What I would tell you with that is I think the best thing that you could do is like when you take a photo, right, and it gives you this stuff here.
Yeah.
I would tell you to just copy, like open up an email, right?
Yeah.
And then click copy and then just paste it into the email.
Oh. But you want them to put name on the link, like whatever we're doing. If you are doing, for example, type 1 in London Station, how can we put name like that?
So here I'll if you do this, okay, let's say you're doing homework, right?
Yeah. Mm-hmm.
And open up an email, right? And let's say you're doing type 1s, and then start collecting your screenshots for type 1s. So copy and then paste it. Boom, there's one. You keep going to the next one. Take another screenshot, copy it, paste it.
Yeah, Gmail. I don't think I can do that on the Gmail.
You can do that on any email. It doesn't matter.
Okay.
Yeah, you can do it on any email. It doesn't matter. It could be Gmail or any. It doesn't matter. You have your email open, right? Just have the email open ready, and then just make your box smaller.
Yeah.
And you could have it like a side-to-side thing like this.
Yeah, but when the image is safe, to what folder this image go?
I don't know.
Yeah, because this is the problem. Sometimes we want to do, like 10 type 1 and save it, and then, open the email and send it to you the way,
Right.
Mark, if it helps, you can do it in Microsoft Word as well. That will actually add in hyperlinks.
Okay.
That's if he wants to save it as he goes before he's ready to send it all off.
Okay. Well, there you go. You ever use Microsoft? What is it? Word?
Microsoft Word.
Okay.
Microsoft Word.
Yeah. Microsoft Word.
Or is it that you're searching, you're looking for where it's actually saved on your computer?
Right.
Yeah, that's what I'm looking. It's where can I save that thing in my computer?
Where does it save to on his computer when he clicks save? I don't think it saves it. I think it just clicks, it puts it as a hyperlink up here. Like you see how it created a link up here?
Yeah.
On the next, another thumbnail basically.
My computer is not doing this. It's not creating that link.
You know? So if you click save, it just opens up another thumbnail and it's basically all there. You know?
Okay.
It saves on, okay, yeah, it saves on the TradingView server. Yeah. So that's what I'm saying. Like, I think the best way to do it is just to take the photo and just copy and paste it. If you have like a notes or something like that, or like he was talking about, you can use it on Word and do hyperlinks instead of like that. So you had a PC or a Mac?
I got a Windows.
Windows, yeah.
Okay, another question. When you're talking about the DNA, EMA on our favor, I believe, like, for example, say over here, we do, for example, you see the 200 over here?
Yeah.
And 200 over here. And then, for example, if I play a sell, I thought that this DNA right here is on my favor, not when it's over here, like you say, you know.
Okay, gotcha. So when I say the EMA's in your favor, I'm meaning like if you're taking a trade here and the EMAs are above you, so you can use them as take profits.
Okay. As a take
So yeah, so what I mean when I say use the EMAs when they're in your favor, that means that like they're above you, and let's say you're taking a buy, and so you can use them, you know, as take profits.
Okay.
So if you're in your example, if you're doing a sell, right? Let's say if you're here and you're doing this sell, then obviously you can't use that one in your favor because it's above you, right? And you're going against, you know, where the EMAs are.
Okay.
So that's what I mean by in your favor.
Okay.
Is they're in your favor because you can use them as take profits, basically.
Okay.
You know, you're not always going to have them in your favor, but when they do, it's great because you have basically a point of where you can go and take price.
Okay.
You know?
Yeah, okay.
So that's what that means.
Are we going to review together the question of the exam?
I'm sorry, say that one more time.
Are we going to review together the question for the exam?
Yeah, I was going to ask, does anybody have any other questions before I do that? So any other question before we go